Let's get right to it, though, and welcome in our first headliner of the day, David Einhorn of Greenlight Capital. It's good to see you again. It's been a while. Welcome.
Good to see you, Scott, and congratulations on your 10 years.
Appreciate it very much. I have your most recent letter in front of me, David, that just dropped this morning, and it's clear that you are very much focused on inflation. You say, quote, inflation is here, and it appears poised to worsen. You don't think it's as transitory as the Fed says. Why do you think the Fed is so wrong?
Well, I don't think they have any choice. I think the Fed is committed to a position that just has to hope that inflation goes away because they don't really have the stomach to fight it. So they have to obfuscate the data. They have to kind of hope it goes away and kind of see what happens. But when you look at what's actually going on, there's both the monetary and the fiscal policies which are causing inflation, but also there's a real shortage of things. And it's not just bottlenecks. Some of it comes from a lack of investment because companies that actually make things don't get a lot of investment in the market. And so they have very high costs of equity, and so they choose not to add capacity. And so that's why we have shortages of all kinds of things, from energy to materials to a lot of goods in companies that many people think are just sort of boring, and so they trade at low multiples. And so the managements don't invest in their businesses.
You're pretty critical of Fed Chair Jay Powell. You say, quote, he hasn't lifted a finger to fight inflation. Instead, he has maintained a policy designed to create inflation. I don't know if you saw Paul Tudor Jones on the network this morning. He called Fed policy the most inappropriate monetary policy of his lifetime. Let's listen to what PTJ said this morning, David, and we can react on the other side. And I'd like your thoughts, too.
I think the thing that, to me, is the number one issue facing the Main Street investors is inflation. And it's pretty clear to me that inflation is not transitory. It's here to stay. And it's probably the single biggest threat to certainly financial markets. And again, probably, I think, to society just in general.
It sounds to me like you and Paul Tudor Jones agree almost 100% on the issue of inflation.
I guess that's right. I agree with everything I just heard him say.
The problem is you say that they don't have the stomach. I think that's the word you used, making the point that you think they're afraid to do anything because it may cause a recession and cause the stock market to crash.
Yeah, that's right. When this chair had a tighter monetary policy in 2018 and the stock market began going down and he began to face criticism from President Trump and from others, his response was to just get out of the kitchen. And he pivoted, changed directions, and chose to avoid criticism rather than continue his policy because he just didn't have the stomach to watch the stock market go down.
So in your mind, what's the answer? Does the Fed need to act immediately with the taper? I assume you think they're already too late. And what about raising rates?
Well, I don't know what the Fed should do. I don't run the Fed. I observe what the Fed does. And quite frankly, sometimes you go from good choices and choosing between them to a good choice and a bad choice to a mediocre choice and a bad choice. And I think they've kind of driven the train, down the tracks and kicked the can down the road. And they may only be faced with bad choices at this point. So now it's a little late to say, well, now what should they do?
Well, in the letter that preceded the one that I got my hands on this morning, you suggested that they need to immediately end QE and that they need to, quote, rapidly increase rates to deal with inflation.
That's not what I said. What I said is their plan is to gradually eliminate QE and to gradually raise rates. So that's what their plan is. I'm just not sure that that's going to be realistic in being successful in fighting the level of inflation that we have.
But do you think that they should immediately end QE and raise rates as soon as they possibly can to deal with the very issues that you lay out?
Well, I don't know. They're really left with bad choices because if they act very aggressively, financial assets will go down a lot. It could cause another recession. The blame that was there in 2018 could be much worse this time because our fiscal and monetary policies are already so much more stretched even than they were 3 years ago. I don't really know what would happen, and I don't really have advice to them what to do.